Nigeria's Naira made significant strides in the foreign exchange market last week, breaking key resistance levels. It opened last week at 1,663 Naira per dollar and closed at 1,537 Naira per dollar in the official market, marking a gain of 126 Naira in just 5 days. However, the currency surged to 1,530 Naira per dollar on Saturday before settling at 1,508 Naira per dollar on Sunday in the parallel market. Market analysts point to several factors driving this unexpected rally, from the increased transparency and efficiency brought by EFEMS to oversubscription of Nigeria's recent $2 billion Eurobond issuance, which has injected liquidity into the market. Well, joining me for more on this, I have Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill Denham. Thank you, Oladipo, for joining me today.
Yeah, good morning, Petra. Thank you very much for having me on this morning.
All right, so we see Naira reportedly firmed up by over 100 Naira in the last week. Is it Uhuru yet? And is the Naira still reporting gains? Because I know trading has started today.
Well, I think currently Naira is still on a winning stride. Of course, we saw what happened on the parallel market over the weekend. But however, considering that the market is still overwatched with suppliers in the market, we are still seeing more like a stable Naira in the market and a strong Naira as we speak currently. I think the B-matching system actually did the magic. Last week, we were here talking about the implementation of this system, and one thing I mentioned was that this system will bring about transparency and also could also bring about liquidity. And I remember you played me a video where one of the CBN advisors was saying that the problem of the market is not liquidity, but goes beyond manipulation on the part of market participants. But I think with what has happened in the last days, I think this actually called the CBN true to what they are saying around it, because Perpetua since Monday, what we have been seeing in market was more like heavy suppliers into the market. So it simply means that the demand that we have all been clamoring about, they are either a pseudo demand or demand that does not even have, maybe not legitimate. And it's not something anyone can bring to the forefront, considering the current implementation and the report required by the Central Bank of Nigeria.
All right, you're talking about Zilla Karaiwe, I suppose. I mean, we played his video last week. Now, away from that, I mean, yeah. I would have thought that the parallel market would have collapsed by now. So why do we still have the parallel market playing strongly?
No, you know one thing about parallel markets. Parallel markets more like the cash market. And remember I said last week that you will not see the parallel market just disappear because you still have people coming into the country. They need a market where they can actually exchange their dollars. Until when the central bank actually creates a market for them, in other developed nations, you don't actually have more like a BDC. There's some country you walk into the bank and you exchange your currency for whatever currency that's spent in that country. I remember in Germany, you walk into the bank and convert to whatever country currency you actually want to spend in that country. Until when we get to that level, the parallel market will still very much relevant, and that's what they are still currently doing. But one thing you will notice is that the parallel market will move in direction of what is happening in the official window. And the good part of this policy was the fact that BDC license operators also they are also participants in this market. So it means that those that have met the requirement of the central bank, those ones that have actually perfected their licensing with the central bank, they met the capital required of $2 billion for someone operating all through the country, and those are 500 million for someone that's actually looking at having like 3 branches in a particular state. So if you have done this, you actually have the right to actually be part of this platform. It simply means that you can buy to actually meet the demand of your client from this platform. So what this will mean is that rather than the market taking clue from the parallel market will now be taking clue from what is happening in the official window, and that's exactly what happened last week. Sometimes you may see that lag effect of the movement, but one thing is that the official window will be a pointer to where the parallel market will actually go.
All right, so can we entirely attribute the gains to EFEMS, the new matching system, or is there some element of panic selling, or even is the season also contributing to what we're seeing in the market?
You see, I will ascribe like about 90% of this to the EFEMS system. Because what the system has done is that it has shown clearly that the demand we have all been clamoring about, they are not actually there. For example, look at what happened in the market on Friday. As I close the market on Friday, we have about 47 million sitting on the offer side. And we have less than about 5 million sitting on the bid. So what simply means that we have people that want to sell close to about $47 million in the market looking for buyers to actually lift it from them, but there are no buyers in the market. So what this also means is that for a long time, we've been saying that Naira is highly undervalued. And the action that we saw in the last week also lent credence to our view. Because if you know that Naira is actually overvalued, you will not, of course, you will not sell the dollar with that ease. But because you know currently that Naira is actually heavily undervalued. So it simply means that a correction is expected at a particular point in time. So immediately people saw the signal, they saw it as the correct, much awaited correction. And as a result of that, we started seeing everyone trying to actually jump and sell to the market what they were holding. And that's exactly what led to the panic selling that you talk about. And when you talk about seasonal supply into the market, of course, I agree to a great extent that sometimes in December, we tend to see influx of effects in the market. But this only affects the parallel market. We don't see the effects in the official market. Because these guys that we are talking about, they come in with physical cash into the market, not a transfer to the FX market. And when you look at the quantum of what they bring to the market, it's not sizable enough to move the official window. So exactly what is happening is what the CBN did on the BMAT system rather than what's happening, whether the seasonal thing or panic selling. The panic selling was paused from the implementation of the EFEMS platform that actually showed the whole market that the demand is not as great as the supply that we are seeing in the market.
All right. See, some of us would like to know more about, how the system works. You've said a lot about the bid side, the offer side, and all of this. And, I'd like you to talk to us about the quoting system and what sort of differentiates it from what used to be. We also hear it is similar to the way stocks are sort of traded on the NGX, just like you have sort of alluded to. Talk to us about this.
You see, it's more like an order system, just like what you have said, like what we use in the stock exchange market. So what it means is that people come to the market to put their bid and offer. So if you're a market maker are people that you are expected to go to the market every day to show your buying price and your selling price in the market every day. Whether you want to buy or whether you want to sell, you must go to the market to show both prices in the market. And we have other participants in the market that they are not market makers. The BDCs are not market makers. They just go to the market and show the signs of what they want to do. For a BDC that wants to buy, it goes to the market and show, I want to buy so amount at so price. And what the market will do is that the market will now align the orders in the hierarchy of their pricing. For example, what you will see on the bid side is that you will see someone that has the best buying price. So if you have several people in the market that say, we want to buy a dollar at 1.5, 1.6, 1.7, the best price to buy is 1.7. So 1.7 will rank as number one on the bid side. So on the offer side as well, you see people that want to sell. Someone wants to sell at 1.8, someone wants to sell at 1.9, someone wants to sell at 2,000. The one that will rank best will be the one that wants to sell at 1.8. So when you open the platform, you'll be seeing the best bid as 1.7, and you will see the best offer as 1.8. Until when you see a buyer at whether a buyer at 1.8 or a seller at 1.7, no trade will match. So until when you have the prices of both the buyer and the seller matching, is at that point that the prices will actually match in the market. So it's more like an order system. So it will show you all the orders, all the actions of people in the market, the number of people that want to buy, the volume that people want to sell. So it's more like a very transparent platform that shows the old world what is happening in the FX market, rather than the one we used to have where it's basically more like an interbank market that you also need to actually, most foreign investors there, they need to call to say where is Naira trading for them to have an idea of where we are currently trading in the market at that particular point. But now they can also view what is happening on the platform from their Bloomberg terminal. And that's also helped them to actually participate in the market. And for me, I feel that this is just a beginning of great things to come. Because what the CBN has said is that they are also still looking to actually onboard the IOCs on this platform. So it simply means like a shell or a movie that want to buy or sell dollar. They don't need to go through the CBN. They can just come to this market directly and just sell to the market. So I think this is a very good one on the part of the central bank.
All right, so let's close with this. I mean, there is no way we're going to talk about this without talking about the Eurobond. So, about the latest Eurobond issued by Nigeria, I bet you would call it successful by every standard. I'd like you to talk to us about this. Were your expectations exceeded? Maybe I'll just do a 2-in-1 question. And then how does this compare? That's the yield we're seeing or we saw. How does it compare to other issuances across the continent and those currently trading in Nigeria secondary markets? 2-in-1 so we can close.
Well, just like what you have said, the Eurobond is actually a great success because when you look at the total order book, we had about $9.1 billion compared to the 2.2 that we actually offered to the market. So what this means is that a lot of people want to invest in Nigeria. A lot of investors love Nigeria, and they actually demonstrated that at that Eurobond mission market. It was a very great one. And when you look at the pricing as well, it priced at around the 6.5-year price at 9.625, and the 10-year price at 10.375. So it tells you that it is a lot of people are actually looking to actually buy Nigeria. A lot of people are looking for opportunity to come to the Nigerian market and take advantage of these things. But because of the currency volatility, a lot of them could not come to our Naira market. But rather than that, they just felt that, okay, we can actually stay with Nigeria by actually investing in their dollar-denominated asset. And that's exactly what we saw at the last auction. And when you look at the pricing, where is it trading now? Perpetual, the same instrument that was issued around 9.625, currently trading around 9.1% in the market as we speak. Because aside what we saw in the primary market, currently in the secondary market is trading at a very high level. A lot of people are still in the market asking to actually buy this instrument in the secondary market. If you look at the 10-year bond that was issued at $100, it's currently trading around $104.5 currently in the market. So it tells you that a lot of investors actually want Nigeria. But some of them are actually staying there because of the volatility of the currency. But now that they see an opportunity to actually take advantage of what we have to offer in the Eurobond space, they are actually there to actually take advantage of it fully.
All right, thank you so much. There's really a lot to say. I mean, beyond all these, what I see is a steeper borrowing cost, but that's conversation for another day. I hear we need to close now. Thank you so much for coming on the show today. Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. Thank you for your time on the show today.
You are welcome. Thank you very much, Rebecca, for having me on.
All right, we'll have that conversation some other time. Well, many thanks for watching. Thank you for joining us today. This is the size of a package on Business Edge today. I am Perpetua Fasama Peter. Do enjoy the rest of the day. Bye for now.